Okay, let's go ahead and talk about the stochastic RSI, and that is this indicator that I have pulled up right here. And basically, what it does is it measures the momentum of the movements in the actual RSI. And the idea is that the momentum will change before there's actually a reversal in relative strength. And this can be used to identify and predict reversals. So how it works is it basically takes the price data from a 14 period range, and the general rule that the stochastic RSI indicator follows is that during an uptrend on the RSI, meaning that when strength is increasing, new strength highs will generally close near the highs of that period, and likewise during a downtrend in relative strength, meaning when strength is decreasing, strength will generally close near the low of where that session was. Now, if the opposite is to occur, basically what the stochastic RSI is going to do is it is going to identify this as momentum slowing. And this is basically portrayed when you see the blue and the orange line kind of cross over. Basically, what the orange line represents is a signal line, and the blue line can be associated with the relative momentum of the relative strength. Now, that may sound a bit confusing, but let's go ahead and just talk about quickly what each of the different levels on the stochastic RSI are. So you do have the same thing that you have on the RSI where you have overbought conditions and oversold conditions. Same thing on the stochastic RSI. When we're above a level of 80, that means that the RSI is generally overbought. And same thing for being below a level of 20 on the stochastic RSI, that means that the RSI is oversold. So you can kind of think of the stochastic RSI as being an indicator of the actual RSI indicator. A weird concept, but very useful. Now, when we do see the stochastic RSI hit 100, that means that the RSI has reached a high that it has not reached in the past 14-day period. Same thing for when it reaches a level of 0, that means that the RSI has reached a low that it has not reached in the past 14 periods. And by periods, I mean whatever candlestick interval you are using. So this is incredibly useful for identifying when to take entries and when to take exits. Typically, what the good rule of thumb is, and a very strong strategy, is to wait for the RSI to show overbought or oversold conditions. Notice here it's showing those oversold conditions, and that alone is an entry confirmation to go ahead and take a long position. However, you can get additional confirmation by waiting for there to be a crossover and change in momentum on the stochastic RSI. Notice we get that crossover right here that's coming out of these oversold conditions on the stochastic RSI. And we're also seeing that we were in those oversold conditions on the actual RSI. This is kind of like a double confirmation to go ahead and take a trade to the upside and then play a move from there. Same thing for overbought conditions. Notice here we're seeing that we have those overbought conditions on the RSI. And when we get that crossover or change in momentum, go ahead and take a short position and play that back downward. Of course, you could play that to where the RSI becomes overbought or oversold. And in this case, this is where it became oversold, actually marking right exactly where the bottom is. Or you can use a price target that we'll talk about in future videos. But the stochastic RSI is incredibly useful, especially when used in tandem with the actual RSI. And another great way you can look at this is by using it and looking for divergences. So notice here, we have price is actually increasing. And we talked about RSI divergence already. And notice right here, we have a divergence in the RSI price. And that means that strength is decreasing as price is increasing. Now, how you can go ahead and take an entry is first waiting for that lower trend line to break. Notice we're seeing that lower trend line break over here. And if we can also get that crossover on the stochastic RSI, that is generally a very strong entry and adds as confirmation to go ahead and take a signal. Also, what you can do is wait for there to be a retest and wait for that stochastic RSI to cross over and break out of those overbought conditions, and then take a move to the downside. Same thing, notice over here, this time we're looking at bullish divergence. We have those consecutive lower lows, and we have those higher lows on the RSI. And basically what you're looking for, remember, when the RSI does reach that low within the bounds of 30 to 70, generally that is the last low during bearish or bullish divergence. In this case, this would be bullish divergence. And basically what we're looking for is you want to see that crossover out of the oversold conditions on the stochastic RSI And if you can get that, then you can go ahead and take an entry to the upside. Also, if there's just to be a simple trend line break, notice here we get that trend line break right here, and we get that crossover out of those oversold conditions. Very strong opportunity to take a play to the upside.